Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. The automotive component sector works as the central nervous system of the global auto industry. Many of us are unaware of the fact that in one in every two cars has at least one component that is manufactured in India. Lumax Auto Technologies, a 5,500 crore industry, has emerged as a microcosm of this very critical powerhouse industry, with its financial year 2025 results giving deep insights into the evolving nature of India's auto sector. While investors focus on flashy EV startups and legacy original equipment manufacturers, companies like Lumax are quietly rewriting the rules of value creation through strategic pivots and operational excellence. Their latest results, a 29% jump in revenue, 37% surge in profits, and a record breaking earnings before interest and tax margins, mask a deeper story about supply chain realignments, technological advancements, and adaptation of new technologies, and complex dance between internal combustion engines and electrical vehicles. The financial performance of Lumax has been record breaking, with its revenue and profits both reaching new heights. Lumax has achieved a consolidated revenue of 3,637 crore rupees in financial year 2025. This is a 29% jump year on year basis, increase from 2,822 in financial year 2024. The fourth quarter marked a historic milestone with nearly 1,133 crores of revenue, the first time the company has ever crossed a 1,000 crore mark in a single quarter. Net profit surged 37% to 229 crores, driven by operational efficiencies and margin expansions. Taking a closer look at the margins, well, its EBITDA margins reduced slightly. In financial year 2024, the margins stood at 14.6, while in financial year 2025, they were on a slightly lower side at 14.2, thanks basically to inflationary pressures. Having a look at return on equity, it stood at 20.6, while return on capital employed reached 19.3, both outperforming industry averages. Now, the debt management and cash flow of the company was also impressive. The company reduced net debt to 136 crore rupees with a conservative debt to equity ratio at 0.885. Free cash flow generation hit 322 crore rupees, enabling strategic acquisitions without equity dilution on part of the company founders. While studying a company, it is very important to know the people who run it. What do they stand for? What is their experience? In case of Lumax, it was founded in 1981 by Mr. Dhanesh Kumar Jain, who is a recognized pioneer in the Indian automotive component sector. He has a 50 years of experience in this sector and has served as a president of the Association of Automotive Component Manufacturers of India, as well as has served on several committees of CII. His family members, Deepak Jain and Anmol Jain, serve with him on the board of this company. A silent revolution is brooding in the automotive component sector thanks to EV disruption and component shift dynamics. While EVs constitute just 2.6% of the Indian passenger vehicles, they are triggering a seismic shift. One such shift is the component cost rebalancing. EVs replace nearly 40 to 50% of the traditional ICE components. ICE, internal combustion engines, the traditional cars which we knew till EVs came into the picture. Right? A typical EV battery pack alone accounts for nearly 35 to 45% of the total cost. Now, Lumax strategic pivot is that the company has allocated 18% of its financial year 2025 capex, which is 177 crore rupees, to EV related technologies, including battery thermal management systems and lightweight components. India's auto component exports reached $21.2 billion dollars in financial year 2024, Lumax contributing to this figure significantly. Now, basically, through OEM partnerships, Nearly 20 to 30% of its exports came from servicing global automakers like Volkswagen and Suzuki. Secondly, the cost advantage that Indian companies have over their EU counterparts added to significantly to the advantage of companies like Lumax, where the cost difference was nearly 10 to 15% lower than what the EU companies offered. Looking at the valuation analysis, well, the PE ratio of Lumax stands at 31.1 compared to industry average of 33.8. The price to book ratio stands at 4.69 compared to industry average of 5.2. EV to EBITDA ratio stands at 18.4 compared to industry average of 21.1. The stock is trading at a 12% discount to sectoral averages despite superior ROE and ROEC matrix, suggesting potential undervaluation in the company. Are investors noticing an investment opportunity in this undervalued company? Yes. Mutual funds have increased their holdings by 210 basis points in quarter 4 of financial year 2025. FPIs, foreign portfolio investors, now hold 5.91% stake, up from 4.2% in financial year 2024. Like I have said many times, no company is risk free. So, what are the risks that Lumax faces? Well, the transition from ICE to EV is a walk on a tightrope. Nearly 68% of financial year 2025 revenue still are tied up to the traditional components like transmission systems. Critical EV components like the lithium ion cells remain 92% import dependent, which exposes the company to margin fluctuations because of currency fluctuations. The company faces price pressures from its rivals. BYD, the Chinese EV manufacturer, recently slashed its EV prices by 22%. Now, this directly competes with Lumax's 850 crores component business. Motherson Sumi, who is a legacy rival with a 40% market share in wiring harnesses, creates pricing pressures in Lumax 1214 crore electrical segment. To sum up, Lumax Auto Technologies exemplifies how a traditional auto component supplier can reinvent itself for the electric age. Its financial year 2025 performance, rooted in margin discipline, 14.2% EBITDA despite of inflationary pressures, and smart capital allocation, 177% capex allocation for components used in EVs, and strategic acquisitions, positions itself as a bridge between India's ICE past and EV future. However, the real test lies in scaling the EV components business from its current 12% to projected 35% by 2030, while maintaining the critical return ratios. For investors, Lumax presents a compelling case study in transition management. The stock's 22% discount to intrinsic value suggests an upside potential, but only for those comfortable with the sector's binary EV adoption risks. As the industry evolves, Lumax's ability to blend old economy cash cows with new age tech solutions will determine whether it will become India's Bosch or just another regional player. The automotive component sector contributes 2.3% to India's GDP but employs more than 5 million employees. A reminder that behind every stock chart lies a complex web of technological challenges and changes, labor dynamics, and geopolitical supply chains. Lumax's journey offers a masterclass in navigating this terrain. This is the end of the video. I hope you have liked this educational video, as it was not a stock recommendation but a way to study this company, which seems to have a bright future. What are your thoughts on Lumax? Please write to me in the comment section and I will be happy to read them. If you have liked this video, please like, share, and subscribe to our channel for more such educational content which will help you in your investing journey. Before I go, a kind reminder, please approach a certified investment advisor who can give you the right investment advice. Until next time, stay safe and goodbye.